Well, welcome to the inaugural Jigsaw Tax Treaty Wags budget post-budget wrap. We're also here to talk about the single touch payroll a bit further down the track. But as accountants, we get very excited of budget night. So for those of you who don't know me, my name is Joanne and Michael, and this is Michael and we are the owners of Jigsaw Tax. And we're also the people who are studying this whole new Tradie Wags concept. So if you haven't already signed up to the Tradie Wags newsletter, please go and sign up at www.tradiewags.com.au. Okay, so Michael, this morning you went to the post-budget breakfast at Parliament House. What was the general feel of the budget from last night?
Well, having the budget breakfast a bit earlier in the year actually made it a lot warmer. It was above zero, as normally when you go up at 7 o'clock in the morning, it's actually quite cold. So this morning the feeling was it was more of an election pitch, what we saw last night with the budget. Most people are taking it seriously, being a liberal budget, but also the fact that mindful that probably tomorrow or the next day or two, we'll be seeing a new election called. So we won't be seeing this being passed with this government, and who knows what the makeup of both the lower and the upper house will be come 1st of July when the new tax year begins. Both sides this morning presented their ideas, mainly the Liberals, and we'll be hearing in the next day or two what the Labor Party will be coming up with. But there were some quite large changes to tax rates for the companies, for individuals mainly, and a few little tweaks that need to be done. The main concern that was mentioned this morning, that certain items from even last year's budget still haven't passed. So again, we've just got to keep mindful that I wouldn't be going out and spending $25,000, $30,000 on new assets until we see that stamp of royal assent being firmly placed in the legislation that was presented last night.
Yeah, I think it's important people understand that. So a budget is what they want to do, and then after that it actually has to go to Parliament, has to go through the lower house and be passed, it has to go to the upper house and be passed, and then it has to receive royal assent. So we always do sort of talk about this at the budget time. It's great to know that these things are here, but if it ever actually comes into law, we're not, particularly at the moment with a potential change of government, we're really not too sure. But we of course need to know what we might be dealing with.
Oh, definitely, and a lot of those changes we'll be seeing in our pocket from 1st of July when we lodge our tax returns. There's some offsets and some what I call election sweeteners. If you elect the Liberal government, there's some nice little tax offsets hidden in there. So when you lodge your tax return on 1st of July, you'll get an extra $540 per person. So we'll go through, Joe, we'll go through that.
Well, let's jump straight to that. So I'm going to talk a bit about the personal tax cuts, which is obviously something that most of us feel a little bit excited about to a small degree because it affects us personally. So first of all, you'll see on your screen the changes to the personal tax cuts. Now, this came into play last year when in the budget they did announce what's called the personal tax. I don't know, but anyway, they
basically middle income tax offset.
No, but they also put forward this change in tax rates over the next couple of years. So it was most of this stuff was already legislated last year, and what they've done in this new budget is to change that around a little bit. So this is like a 4 or 5 year plan. So from the 1st of July this year, we already had some stuff that had changed. The big ticket item that is, meant to induce us into wanting to vote for the Liberal Party this election is the change to the low to middle income tax offset, otherwise known as the LMITO. So previously, last year, that was brought in as a budget initiative, and it was originally $530. What that means is when we lodge our tax returns, if we're in a tax range between under 125,000, we do get access to this offset. It's not something that changes your tax on a week-to-week basis, but it will come into play when you do lodge your tax return, which means you'll typically get back a little bit more tax at tax time. Now, what they've done is they've actually increased that to $1,080, so that will give us even more money back at tax time. So anyone who's under $126,000 should find some benefit for that, assuming that you are paying tax. So just to clarify, a tax offset doesn't give you money back without you having some tax to pay. So if your tax was zero, you're not going to get extra tax back because there's an offset, because you weren't going to get tax back in the first place. So all it does is it reduces the amount of tax that you would pay. But for anyone who's on a tax rate, on an income over $18,200 or around $20,000, they would actually receive some of the tax that they've paid for their PAYG withholding back at tax time. So we will see that. So that's actually been brought in effective from the 1st of July 2018. So we will actually hopefully get, assuming this gets passed, a nice tax return this year, and that might make people want to come get their tax done.
And on that, I think it should be noted that Labor has actually agreed to the first lot of tax cuts, and those were legislated earlier this year, or I think late last year.
Yeah.
So we'll definitely be getting an increase in the LMITO, but it's more the 2024 changes that are currently not being agreed to with the Labor government. But like someone this morning said, we're about 5-6 Prime Ministers away from that.
Yes, that's true. So the other changes that we have is in 2022, it had been legislated that the 19% tax-free threshold would increase to 41,000. So that has been changed in this budget to 45,000. So instead of the current tax cutoff is 37,000, that will actually go up to 45,000. And then the final change is in the year 2024. The aim is to bring us down to just 3 tax brackets instead of 4 tax brackets. With the 32.5% tax bracket will go to 30%. So they're the things that have changed in what was already, touted from last year.
Yeah.
So.
And it should be mentioned again that this hasn't passed either the new tax brackets for 2024, or the last year's budgets ones, and this year's budgets. Neither have passed. It looks like that Labor will be blocking them very strongly. So again, it really just depends on, even if the government wins power, whether they'll have enough votes in the Senate. They tried it and they did not pass those in the Senate.
I think part of it is they consider this to be a benefit for the people who are better off, but I mean, I don't really feel that a $45,000 salary makes you a particularly rich person. Yeah. So, there is definitely benefit for everyone if they can bring these tax rates. Okay, so now I'm going to ask Michael about the immediate asset write-off, because I know he loves depreciation.
I love a bit of good depreciation.
Anything that can give you a little bit of a scan. So Michael, talk about this one first.
So we all know about this, probably by now, this small business general pool. It does not entirely do a suing pool, as some people thought when it was brought in a few years ago. Currently, it has been legislated to this year, end of this year, that any assets purchased under $20,000 will be immediately deductible under the small business entity rules. 29th of January, the government came out and said that they're increasing it to $25,000. Again, didn't pass the Parliament in time before they shut down, so I don't think that I wouldn't be relying on that too heavily. Last night it was increased again, so any assets that are purchased between 29th of January and 2nd of April have the 25,000 capped, and then from last night onwards it's $30,000. But like I said before at the beginning, please don't go out and buy a new car, BMW, whatever you need. This needs to pass Parliament first. What is interesting though, and look, I'm quite happy with that change.
I'd like to be able to get a BMW for 30,000.
Oh, you can 1983, 3 Series. If they're still around the traps. What is interesting, and there will be a lot of discussion of, is the increase in turnover tests. We are now looking at bigger entities being able to access this this concession, being a $50 million turnover, whereas currently it's only up to $10 million. So your bigger mum and dad companies. At $50 million, we're talking quite large entities would be able to access this.
And probably afford that BMW.
And afford that BMW. We'll talk about luxury car tax changes at the end. But you won't be able to access the small business pooling method of depreciation.
Yeah.
That's a little bit of a tweak in that.
Yeah, so those people who are earning, whose turnover is between 10 million and 50 million, while they'll get that $30,000 asset write-off, they will still have to depreciate in the traditional way that they always have. So.
Yeah, that's fair enough. And these changes would be in place until 2020. Now, the reason the cynical me, as you probably realise, The reason the government won't legislate this on an ongoing basis permanently is they like to have a bit of a positive news every budget, saying that they are redoing this. Now, we've had this since Rudd. We've had all sorts of tweaks, 5 prime ministers ago, that there's some sort of accelerated depreciation in some form or another, but neither party is actually. Labor has committed, which I'll talk about later, that they will legislate the $20,000 instant write-off forever. So it will require an act of parliament to undo that. Now, if it doesn't pass, it goes back to the $1,000 limit. So again, it just depends on. It's a bit of a political football game, this one.
Yeah, it's always that sweetener for small business in the budget, which hasn't really changed anything much at all. But if it can keep going, I think we'd all like that.
Yeah, and some of the feedback we do get is people go out and try to maximise their tax deductions. One thing I like to stress is don't go out there if you weren't going to buy an asset. If it's a difference of maybe buying something a little bit more expensive, maybe. But if you're looking to get a new drill or a new trailer or a car, don't go, I'm going to be able to get more depreciation. You're still having to fork out 70 cents to the dollar roughly if you're paying 30 cents in tax. You're still losing money. So maybe that trailer or that ute can still be used for a bit longer. Bit of money for a holiday instead.
I think it's also important to remind people that you don't actually get the money back.
Yeah.
You get a tax deduction for it. So if you're not making any money in your small business, then you're actually getting nothing for it. So I have seen people go out and buy assets to get access this immediate asset write-off, and it's been of absolutely no benefit to them. So if you are looking at doing that, I really suggest you talk to Michael or myself, or potentially like whoever it is you're dealing with at Jigsaw, and get them to give you a bit of an idea of whether it's actually worth going into that sort of debt or whatever to buy something that may not give you a tax deduction after all.
Yeah, and again, so to add on to that, if you finance it, that's still fine. A lot of the questions I've had is, do I have to pay for it cash? No, it's fine. And can it be secondhand? Yes, as well. So there's no limit or reduction because it's secondhand if you buy something off Gumtree. Just make sure it's documented.
Yeah. Just one last thing on that before we move on to the next slide is at the moment, if we get if our pool value is below $20,000, we can write that off in that year that it goes below the $20,000. If this comes in, we'll be also able to write off the pool value if it's under 25, 30,000. So yeah, so we can hopefully get some benefit out of that.
We've had a few good write-offs over the last 12, 18 months where people have got below that threshold, which is really good.
Cool. All right, so now I'm going to talk to my tradie wags out there about the skills package which has been announced. And we know there's been a lot of talk in elections about vocational education and training and how there's not really the focus on trades. And with the budget, there was a lot of announcement about potential infrastructure spend. And I know in Goulburn particularly, there's a big concern about where are we going to get the people to do this work. So I'm sure this is going to be the same all over the place. Kids aren't necessarily going into a trade as their first choice. They think they have to go to university, etc., etc. And as an employer taking on an apprentice, it can be a little bit of a risky, not necessarily risky, but it's a decision you're making to employ someone for a few years and to really train them up. And so they're trying to give some incentives on that. That tradie that you can see there on the screen is my son, who is actually an apprentice at the moment. So when you've got someone like that coming home, you think someone needs to get some sort of incentive for hiring him. So, so the plan is that over the next 5 years, there's going to be $523 million spent on vocational education and training. That's not just on the apprentices, but it's actually on like TAFE and all those sorts of institutions. It's broken down in the budget how they are going to spend it. But I think the thing that's probably going to be interesting to most people in small business is that there is going to be just over $2 million spent in the next 4 years to establish a new additional identified skills shortage payment, which is going to support up to 80,000 new apprentices over the next 5 years. They will be apprentices in areas where they believe there is a skill shortage. It's not going to be open to every single apprentice, but most people in trades, there is a skill shortage. So I'm sure it will be fairly widely opened. The idea is they're going to increase the current payment, which I believe is $4,000 to employers who are hiring tradies apprentice tradies in certain industries that will increase to $8,000 as an incentive payment, and they will also be giving the apprentice $2,000. So that's actually like 10 grand worth of benefit to those people who are employing and training apprentices, and the $2,000 will no doubt need to be spent on something like tools or whatever. So it's overall a great benefit. So I think that will be a positive step, and I'm sure that is an election-based decision, but I think there's no harm in that at all.
No, I think universal, and being at the budget breakfast and hearing from the shadow assistant treasurer, both parties are really looking towards skill shortages. Each have their own twist to it, but it looks like apprentices and TAFE are both at the front of both parties. So that's always a good thing in my view.
Yeah. Okay. So retirement. Would you like me to speak about retirement, or do you?
Yeah, you can have a chat about that.
I'm the lady who likes the super.
You have a master's in this, so why not?
So there was a little bit of stuff. It probably gets a little confusing for people, so I'm not going to spend too much time on this. But effectively, what they're trying to do is over the next few years, they're going to be increasing the age where you can access the pension. It will be raising to 67 years of age in the next couple of years, and so what they're doing is they're trying to bring the contribution rules for superannuation in line with the pension access rules. So from the 1st of July 2020, what they're going to do is, at the moment, once you turn 65, you have to pass a work-related test to be able to contribute any extra money into your super. So that's particularly in regard to non-concessional contributions, and actually concessional contributions as well. So the work test is that you work at least 40 hours over a 30-day period of time, and that is what allows
in a financial year.
In a financial year, so within that financial year, and that you have, then you can make those contributions. What they're intending to do is to extend that to be 65 and 66, that you can still do that without the work test. We also will have access at that point in time to using the bring forward rules with regard to our concessional and non-concessional contributions, our non-concessional contributions, which means that at the moment in a given year, we can put in $100,000 for our non-concessional contributions, and we can bring forward for 2 years, assuming that we're not going to make any more contributions in that period of time, which allows us to put in 3 years, $300,000 worth of non-concessional contributions. So effectively, they're extending that out to being 66, that you can do that as opposed to 64 at the moment. The other thing they're changing is that the spouse contributions, which currently can be made up to the age of 70, will be extended to 74 years of age. So just is giving people a little bit more chance, a little bit more time to get a bit more money into super. And it will then, make a little bit more sense probably when it aligns with our other pension rules.
Well, that's it. We're looking at a lot of people now moving to 67 for their preservation age, pension age, so it makes sense that some of them would still be having some sort of income stream.
Yeah, it wouldn't be preservation age, would be 67, but it will be ability to access age pension.
Yeah, that's right.
Things like that.
That's why you're the topic. I get the name.
Okay, so what other stuff's happening? So I might get you to start talking about this. Tell us about the expansion of TPAR, Michael.
So taxable payment annual reconciliation. I know a few people in the office get cranky at me for using acronyms, but I'm going to use TPAR as an acronym here. Initially started in the building sector, so especially with the tradie wags. You guys have all known that for the last few years, every subcontract that you have, according to certain rules, you actually need to declare the ABN and also how much you paid them. This was a program to basically reduce cash economy and cash use being paid. It's been a roaring success, not from a processing point of view, but from a tax collection point of view. Remember, I am an ex-ATO auditor, so this is where I like getting into. The ATO is very thorough with this. It does follow up on these. So I think it's a good thing initially in the building construction industry. It's now actually being expanded into new industries every year. 1st of July, a lot of transport industry workers will be now covered under this as well. So if you have a small transport company or a couriering company, you will be required to disclose all your contractors. Now, there's two reasons for this. One is workers' cover is really getting interested in this side, and the other side is the tax being declared by your drivers? So from what I'm seeing, that new industries are going to be added every year, but this is definitely going ahead 1st of July.
My understanding is they're also talking about the cleaning industry and the security industry. I believe both of those are also coming online from the 1st of July 2019. Now, that isn't a budget measure, but we just thought we'd mention it since we're talking about things that are happening on the 1st of July 2019.
The next one is a really dry subject for you guys, not for us. We love it. Division 7A. Look, we're constantly seeing issues with Division 7A. That's when people have companies and essentially pull out a bit too much money than you actually have declared on your salary or dividends. Sometimes it creates a bit of an issue. Changes were to be coming in on 1st of July 2019, but now they'll be delayed for another year.
And part of the reason for that is because they've only just put out the discussion paper in October 2018. They've sought some feedback on their discussion paper, which they've now got, but they haven't actually got to any point where they can pass any legislation. Right. So there will be changes to Division 7A. I'm sure that will keep all of us accountants very busy for a long time. But at the moment, that's been delayed to 2020.
Main changes are around allowing people to basically become compliant, and the rules are becoming harsher and harsher if you're not compliant. Joe and I have a lot of experience in Division 7A. I don't think, nothing keeps me up at night, so it shouldn't keep any of our clients up at night. Next one is something to my heart, being an ex-ATO officer, and those who suffered through the data issues 2 years ago, when literally a cable was broken between one backup system and another one, and it cost the Australian economy probably close to $1 billion. A $3 cable, which is about that long. Someone bent a cable in the data center. That provider is now no longer being allowed to provide ATO data facilities, and all the data will be moved to a much more stronger facility.
Yeah.
So this time, 3 lots of backups don't fail.
Yeah, and that was actually in the fine print of the budget, where they have allocated $70 million for that data migration. So that's good.
It was already happening, but it'll be legislated any minute. Probably already some parts have already legislated. Single touch payroll, it is a nightmare.
We are going to talk about it.
We're going to be talking about it. We've got a whole slide about that, so we'll keep going to the next one. Pay-as-you-go holding for director salaries comes in from 1st of July. This is a really important change, which we'll touch on with single touch payroll as well, and why it's so important that the year-end sort of wrap up where we do director salaries can't continue. The ATO is being very strict on that. I'll go. Do you want to go for the next legislative one?
Yeah, okay. So the to be legislated. So this is like me having a bit of a read of the fine print of what was in the budget last night. So there is actually a new project about ABN integrity, and that's going to, it's part of the black economy stuff, but I just found it kind of interesting, particularly for us accountants out there. It's very easy for you to go online and apply for an ABN, and a lot of people do get ABNs and never really do anything with it. They might use it for, they might intend to use it, or they might be using it for something illegal. Who knows what they're doing with it. Or just not declaring the income that they've applied for it. So from the 1st of July 2021, they're going to insist that people with an ABN who have an income tax obligation lodge their tax returns. And from the 1st of July 2022, everyone will have to confirm the accuracy of their ABN data on the ABR every year. So there will be, you know, they've actually, in the budget, it's got quite a bit of money they expect to get in based on this. So it's obviously a fairly big problem, more so than we even really imagined. So that's the ABN Integrity Project. Do you want to talk about the primary production?
Yeah,
or do you want me to do that?
I'll do that. So as we all know, a lot of cars are becoming more and more subject to the luxury car tax limit, which sits anywhere between $57,000 I think $65,000, depending on your type of vehicle. Now, a lot of primary producers have vehicles over and above that. Land Cruisers, most major four-wheel drives are above that. Again, trucks are exempt, but there are lots of four-wheel drives that are above the LCT limit of $57,000. It should also be noted that if you get even a car under that, if you then put a bull bar on and some tyres and some suspension, which is fairly common, maybe even a tow bar, that could put you up over that. Primary producers will be entitled to a $10,000 rebate.
They're currently entitled to $3,000.
$3,000. So it's now being increased, but it goes back to, it's a rebate or an offset, so you actually have to pay tax to get that back.
No, that's not true.
Oh,
okay. You actually go to the ATO. You do not do it through your tax return.
Right. Okay.
Sorry, I had to look into it because I was not aware of this legislation last night. So you do it, we go through, we do a form, we to send to the tax office, and they will pay you that money.
Right, that's how they're doing it.
It's only available for primary producers. It's also available for tourism operators. So if you're buying a hire car or something like that, and it's expensive, and using it for that purpose, you can get it as well. So that's something we might go back and have a look, because we might have some primary producers who are able to get that rebate. So the $10,000 increase, assuming it goes to Parliament, will be from the 1st of July 2019.
Yep. Most dealers are onto it as well, so if you are subject to it, they'll usually process it for you on the spot. Again, utes are not subject to LCT, so that $95,000 Mercedes X-Class ute that you just bought with the V8 and sports suspension, that's fine, that's exempt from the luxury car tax.
I'm thinking that might be your next car.
Yeah. My wife would not be happy with that. $1 billion in extra compliance funding. Everyone's talking about multinationals, and the fact that someone like Glencore has never actually paid a single cent of tax in Australia to date, with some profit shifting going around. So there's an extra $1 billion being allocated, which is a huge amount when you come to the ATO's budget. That's huge. It's a lot of tax auditors to basically strengthen agreements with other countries, more lawyers and auditors out there. And they'll also be focusing on the high wealth individuals as well. Is getting a boost. So that's India, I think the 20 million plus net wealth.
And I sort of makes me wonder, like the fact that that's getting a boost. They have specifically said they're not. That's not for small business audit, but my thoughts are they will just direct the funds that we're going to that probably back to small business.
Yeah.
Like we've seen a lot more audit activity of late, and I think with single touch payroll coming online very soon, I think we'll see only more of that in the future.
It's going to be harder to hide, really. A few other bits that I just read through the budget, more cybersecurity funding for all APS agencies. Considering there was a breach in Parliament House's IT system only a few weeks ago, a month ago. All departments dealing with our tax file numbers and MyGov, the central database for everything, it really does need to be strengthened. So that's not a bad thing. Last few days we've heard about the $75 a year electricity for pensioners. That was this morning extended to New Start recipients as well. So I think it's $75 a year for an individual, $125 per thing. This was raised during the breakfast this morning, and it was seen more of as a tokenistic election grab, a couple of days out. A lot of people had a bit of a chuckle at that. Yeah,
I can't see that that's going to really change too many people's voting preferences. Yeah. So, all right, we might go on to our single touch payroll. We'll save the questions to the end, and we'll ask if anyone has any questions at the end. So if you have got any questions, please write them down and don't forget what you're going to ask us. So single touch payroll, I might get Michael to talk about it because it's the hot topic for us accountants. It's what does keep us up a little bit at night at the moment. And it's not in itself that big a deal, but it's the fact that it's so all-encompassing, isn't it, Michael? So can you just explain to everyone what single touch payroll is?
So single touch payroll, at the moment, as we all know, once a quarter or once a month we fill out our BAS. We tell the ATO how much salary we've had for this quarter or this period. At the end of the year, we send out some group certificates. At the moment, there's no way for the ATO to confidently data match that against pays. They have no ability to confidently match superannuation contributions to pays. People are letting their pay-as-you-go withholding debts increase. And really, and then we've also heard about the Centrelink robo-debt saga, where they've taken someone's salary and then divided over 52 weeks. Now, that doesn't work because, say with Centrelink, if you have on New Start for 6 months, then you get a job on 50 grand. That didn't mean that you earned $1,000 a week. You actually earned $2,000 a week when you came off New Start. So there's issues with other departments trying to get more data out of employers. And the last one is Fair Work is now starting to have a bit of a sneaky peek at this information as well, because they're now looking at whether employers are actually paying the right amount to their staff. So single touch payroll came about 4, 5, 6 years ago now. It's been a while. There's been stops, starts, changes. Software developers haven't been ready for the last lot of registrations. And this is basically being seen as the biggest change to employment since essentially the GST. So this is a big change, 19 years since the GST came, when we had pay-as-you-go withholding came in, right, and we stopped having group certificates, but we had payment summaries. So the change is now that as you pay your staff, you will report that information with their tax file numbers directly to the tax office. It means that you can't have the excuse, oh, my employer lost my payment summary or they haven't got around to it. The ATO will know who's being paid what and when.
There will no be, there won't be payment summaries anymore.
That's the biggest change is
pre-filled.
it will all be pre-filled with the tax office. You just log onto your MyGov and you download your annual report. That's the single touch payroll one. Now the reason it's so big is every single employer in Australia must comply. There's no ifs, no buts. It's like GST. You can't just say, I don't feel like paying GST even though I earn 75 grand or more. You will have to comply. Now,
so can you just explain to everyone what they actually have to do?
Yeah. So the old way of reporting it once a year is gone. You'll actually now need what's called STP compliance software. The ATO has specifically said they will not be providing any type of portal or any type of software. Those of you who remember when when GST came in, ATO did provide bookkeeping software called I think it was ATO eRecord.
eRecord.
Yeah, so it was clunky, but a few people used it and it was fine. And for a small employer, that was fine. So you will actually need to register with a single touch payroll provider software, and they range anywhere from $5 a month to top one, $0, $120, $130 a month. There'll be no way to fiddle with people's pay-as-you-go withholding rates because it will be reported to the tax office. The biggest change is though for small companies, what they call the mum and dads, because you're actually going to have to now report your expected wages or expected profit on a weekly, monthly or quarterly basis, which means that your records are actually going to be having to be up to date because you've actually got to process withholding for yourself for the first time. But it's not that bad because it should lower your pay-as-you-go installment at the same time if you've got tax payable.
I think one of the issues that we're facing is that we've got to go through and identify what each of our clients is doing, and we have to then make sure that we're in a position to put their payroll onto the single touch payroll platform. So if they're doing it manually, for example, we have to come up with a solution for them. For those who are already using Xero, MYB, QuickBook, any of those programs, they do have single touch payroll. We literally just have to put it up online. We've got a bit of a task force going on at work at the moment to get that sorted, and we will let you know what we're doing with it, for you, etc. If you're not sure, please feel free to contact us. But if you aren't using an online software program to do your payroll, you really need to get in contact with us, and we've got to come up with a solution pretty quick. So the important dates to remember:
1st of July. So like Joe said, this year will be the last year that we'll see payment summaries, no more. 1st of July, everyone, 100% of the country needs to be reporting. There are some, there's a bit of a relief for very micro employers, up to 4 people. That includes the owners. So they get to lodge, I think by the 1st or 2nd quarter, they need to be up to date. Again, Super is going to be going through this as well, so it's a timely reminder that you won't be able to be late on Super. We're looking at where we've got, I think, 4 Super guarantee audits at any time running now. The ATO is really cracking down on that, and I see that that's actually going to be a huge job next month, because literally on the 29th of the month after the quarter, they'll know if you're late.
Yeah. And
I wouldn't be surprised if we're getting phone calls within a few weeks.
Yeah.
So it should be quite interesting. I'm just going to open this.
Just one other thing that I just wanted to point out with single touch payroll, when I was reading the budget papers, they are using this to talk to other authorities. particularly Centrelink at the moment. So it will be, the intention is that people who are on New Start, for example, as soon as this money starts coming through or the information starts coming through, they will know that those people are on New Start. You know, they're doing everything they possibly can to take that cash economy out of the equation of people being able to get away with doing things that they shouldn't really be doing. So, you know.
Yeah, and on that, they're actually going to be checking hours, because a lot of like disability service pension, the DSP, it's based on 20 hours worth of work. Your student visa, they're based on 20 hours of work. So Single Touch Payroll 2.0 will actually start reporting the hours that a staff member works in a week to make sure that they're not breaching Department of Immigration and Citizenship rules, that they're not breaching their pension rules, that they're not breaching other rules. And then the next part, from what I understand, it's very much in draft form, Single Touch Payroll 3.0 will actually specify which hours you'll be working, which Fair Work is going to get really interested in, because they want to know that all the right shift allowances are being paid. So it's definitely here to stay. The quicker you get on board with a Single Touch Payroll service provider, the easier it becomes later on.
Great. I just got a question that's come up, and it is, can we explain what happens if you report incorrectly and the time frame to correct that information? And my understanding is that if you do a payroll wrong and you fix it up, that would then get reported as, just because it's effectively, as you do a payroll, you're reporting to the ATO. If you fix that up, it will report that as well. So as long as we're doing that in the right time frame, I imagine if we have to fix something that's, you know, terribly wrong, if we've got it done by the end of the year, we should be okay. And I also do believe that the ATO are going to be fairly lenient with us on the first year. So,
I'll give it a couple of years. Everyone's got to get bedded down. Like with GST, they were fairly lenient if you made a mistake and corrected it, and they still have the $5,000 correction allowance.
So I think, you know, let's just run with it and see how we go, and let's try and get everyone working as well as they possibly can. Cool. All right. So the next thing we wanted to talk about, if you need to ask anything about Single Touch Payroll, we're here to help you. We've got a team working on it. You know, hopefully we'll get it all sorted in time. Okay, so the next thing that's obviously concerned to all of us, and we don't really want to be political in our discussions, but we do have an election coming up. It is the elephant in the room, and so we've sat here and talked about what the budget's told us, but potentially all of that could be thrown out the window in the next few weeks, and we may not even get any of this stuff in place. And we are getting a lot of questions as accountants on what is going to happen if Labor comes in and how that might impact people. And, you know, it is a concern to us, and it's not that we're trying to be political here, but this is probably the biggest change in potential tax legislation that I've seen in a long time, and I think we need to understand what those impacts are. So we might just talk through each one of those things. I'm happy to start with the negative gearing phase out, because that is one thing that a lot of people are really concerned about. So a lot of people buy rental properties, their expenses are more than their income, and that negative gearing is offset against their other income, so they get a tax refund, which helps them to then pay for the fact that their expenses are more than their income, and allows investment in the housing market effectively. The whole phase out of negative gearing is seen as unfair, because it is something that rich people apparently are only able to do, and it is also seen to be affecting the housing market. Now, I think there's been a lot of studies to say that doesn't really happen. We also see that a lot of the people who are negative gearing are not necessarily rich people. They're middle income earners who are just trying to make money in a different way than working. So personally, I can see this is potentially fraught with danger, and that's not a political comment, but I just don't really like the whole concept. The Labor policy is that negative gearing will phase out from a certain date to be determined. They haven't specified a date yet, but I imagine it will be very soon after they come into power that they will say that date. And it will only be applicable to new builds only. So if you do buy a brand new house, you'll still be able to negatively gear, but you won't be able to on existing properties. There is the grandfathering rule, which means if you do already have a property in place, you will still be able to do negative gearing on that property, but you won't be able to if you go and buy an existing house after the date that they say. What they've said is that if you do have negative expenses, like if you would have negatively geared, that will carry forward to your capital gains in the future. So your capital gains tax, your capital gain would be reduced by that negative gearing that you can't take. No idea what the impact is going to be on the housing market if that comes in.
So I'll make some commentary because it was actually brought up this morning. The Institute of Chartered Accountants had a bit of a go. The fact that Labor has been very, very light on details with a lot of their technical changes. One of the things I see with negative gearing to be changed is maybe rather than adding it to the capital gain, they will actually reduce it to like a carry forward loss on that property or in a property class. So that way it won't be stung with the 50% CGT reduction.
Mm-hmm.
The other aspect that we do see is the Treasury modelling has said that there will be minimal impact to the market, both in rents and in house prices. But new studies as of the last 48 hours have shown that it actually could be quite a large impact, mainly because you go, oh, well, it's only new builds. But then that new build becomes an old build.
Yeah.
So if you're an investor who wants to buy a property for 5 or 10 years, now no other investor will want to purchase your property. Whether that takes out the heat and speculation, that might not be such a bad thing. But it also, the flip side is it should promote new builds, new jobs, new sites. So it's a really tough one to call, and both Treasury and a few of the think houses are trying to grapple because nothing like this has ever been promoted since really the Keating era. So, do you want me to do the
Okay, franking credits.
Oh, this is a good one. So, this is actually a huge change for us. Joe and I do a lot of Division 7A in franking credit refund restructuring, trying to get business owners in or out of businesses or superannuation. This is quite a big one. So, at the moment, if you have dividends and you are in a position where you don't pay tax, your CBA shares might come in and there might be $1,000 of the franking credits attached to that. You will actually get a refund on that. And this goes back to...
So yeah, do you want to just explain what a franking credit is?
So let's say you own a company and it has $300 of the sales and $200 of the expenses. Your profit's about $100. $30 goes to the taxman and $70 will be paid out as a dividend to you. Now, you would normally, if you got taxed on the $70 as you received it, you could pay an extra, essentially, up to £47, $33 of tax extra. So if you add the $33 plus the initial $30, you've actually the tax take has actually been $61 or 61% of $100. So what the ATO does and what the Keating government brought in was the ability to frank dividends, and it essentially returns it back as if you, as a dividend holder, were CPA.
Yeah, so essentially, the company has paid the tax, and you're not paying the tax again. You're going to get a credit for the tax the company's paid, and you're going to end up paying tax for money.
Yeah, exactly. The issue becomes where you don't actually pay tax in the year, whether you have had a holiday away and you fall under the tax-free threshold, whether you're a retiree who's receiving a pension income which is tax-free at the time, or you're a superannuation fund which is paying 15 cents to the dollar, but you're getting franking credits of 30 cents to the dollar.
Or if you're in retirement, you're probably not paying any tax in your super fund, but you are getting your franking credits. This has been a big issue, and a lot of people rely on those franking credits to actually fund their self-retirement. They don't get a pension from the Commonwealth, so they're self-funded retarees. This is part of their budget of when they retire. Now, there's two sides to this coin, and Joe and I will probably disagree with this, being young, being a not a millennial, Gen Y. In this case, you can see the reason for it in that the Labor Party said, well, it's tax loophole, but Liberals quite rightly say, well, no, our tax system allows refunds. There's a lot of toing and froing about the positives and negatives, and I think everyone should have a read of where they sit, because it's really fraught with political weight, this one. But basically, the Labor government said if they get in basically next financial year,
there will be no tax refund or franking credit refunds.
From my point of view, it's really a tax on people who tend to be older.
Yeah.
So, you know, retirees are the ones who are going to really find this a struggle. For the rest of us, it may not be such a relevant thing, but, you know, if you've got parents who have got lots of money in shares and what have you, you might find that they're going to struggle because they're not going to get that money back.
What I view, and this is the beauty of politics, is they're testing the water, and essentially if they just said that the first $5,000 or $10,000 will be refundable and use it, there's already provisions in the tax law to do that. I would not be surprised if we see that from the Labor government saying, you know, a small investor threshold, which already exists for other purposes.
Okay. Capital gains tax. So they're talking about changing our capital gains tax as well. For those of you who are not sure what capital gains tax is, it is for people who buy investments, whether it be a property or a share investment or a business or whatever the situation might be. They buy it and they later sell it at a profit, and there is tax to be paid on that profit, on that capital gain. Now, it was brought into legislation on the 19th of September 1985, and originally it came in with an indexation attached to it. So when you sold your investment, they recognised that there was a change in the underlying value of your investment due to inflation. So they put indexation into it, and then a few years after that came into play, they just changed it all together and said, don't worry about indexation, let's just use a 50% deduction if you've held the asset for more than 1 year. So if you bought something for 100,000, sold it for 200,000, held it for more than a year, you've made a capital gain of 100,000. We are allowed to access that 50% discount for you, assuming you're trading that's been made personally or in the right structure, and you would only pay capital gains tax on $50,000. The Labor government don't think that's fair, and they want to reduce that to 25%. Again, it's probably better than reducing it to nothing, but I'm still not a real fan of it. People who've held investments for many, many years, like we're talking, you know, 1986 to now, that's a lot of capital gain that you may have made over that time. And, you know, is it really fair to not take into account the time value of money? I think that's not fair.
Yeah, I agree. I think the 50% was a bit too generous. To, you know, after 12 months to say your inflation's running at 50%, that would be nice. I'm not actually completely paying with bricks of money. But again, like you said, it's the ones who are going to be there for long term with investment properties for self-funding retirees that will struggle with this. 25% is not long, it's probably about 11 years, and indexation catches up to 25%.
Yeah, so with this as well, it's going to be grandfathered, like we were talking about with the negative gearing. So if you hold a capital asset at the moment and this legislation comes in, you would still be able to get the 50% discount.
The next one is the personal income tax rates. I'll just quickly touch on that. We've agreed that the Labor is supporting round one of the tax cuts, but it is not supporting the major changes to the brackets, and I don't see that changing anytime soon.
No, they're also not in support of reducing company tax rate either, which is supposed to reduce to 25% in the next few years from the current 30%. We already are getting some reduction in that for small business. I don't think they're contesting that. It's the larger business, the larger end of town. They don't want to reduce their company tax rate back to 25%. So, would you like to talk about the small business entity test rules?
So a lot of offsets and sort of more tax breaks are available to small business entities, set up, operation, and also retirement. That they're going to actually be expanded to take into account more companies. Labor is at this point not agreeing to a lot of them, so just be wary about that. While you may fall into a small business entity today, you may not in a few months.
Okay, so with the contributions to super, there is a lot of stuff that we actually only just found out this morning, thank you, Prue, in regard to potential changes to the contribution rules for super. And they're essentially going to be reverting a lot of the rules that have come in over the last few years back to the older kind of rules. So they will be they're looking to reduce the amount of non-concessional contributions that you can make from 100,000 down to 75,000. They're also looking at not having the ability to bring forward contributions and probably, but there's a whole bunch of legislation around that. But just be warned, they're not really wanting you to do too much with your super either.
It's quite interesting. We've got two different governments going to an election, and they've gone completely opposite ways. Usually they stick close to each other. On one side, we've got the Liberals saying no work test, bring forward rules, making it easier to put money into super later on in life. The Labor government has gone the other way, and they're actually restricting it and trying to actually make it harder and lower thresholds. So it'll be, you can really see where these two elections or budget policies are aiming their votes for.
And finally, the changes to depreciation. You know a little bit more about this tonight.
So I don't think it'll actually affect many people. Essentially, the government, Labor is proposing that all businesses across Australia, whether you're mum and dad company or BHP, when you purchase an asset, the first 20% gets written off. So as an example, if you buy something, what's an asset that's 10, 15 years worth of depreciation that you've got to write off over quite some time, the Labor government is proposing that all businesses will be able to claim the first 20% straight away. It doesn't affect small businesses too much. It actually hurts them because of the following rules that you actually have to revert to the old system. At the moment, small businesses can claim 15% in the first year and 30% thereafter. The older rules, let's say for a car, you claimed over 8 years, so it works out to be, I think, 18.75%, roughly around there. Anyway, so it's not going to really affect small business entities, but it will actually increase depreciation rates in companies. It's more to align with the expenditure component of that. I don't see that being too much of an election deal, that one.
No. So, and some of this stuff hasn't really been it's in their paperwork, but they haven't really promoted this too much from the Labor Party. So we've sort of done a little bit more of a deep dive to see what we can find out about some of these things. It depends who's being aimed at in regard to it all. So I guess the last thing is where to from here, and because we have just had our budget, the next thing that happens is that the Labor Party will reply on the budget measures. That's happening in 2 days' time.
Yeah, usually about 48 hours after.
We've then got an election coming up very shortly. We imagine that will either be on the 11th of May or the following week after that, because it has to be by the end of May.
Yep.
And then depending on who wins, it's going to be what's going to happen. So it is kind of very strange times, I feel, for us at the moment. We are coming close to an end of financial year. We should be doing tax planning. We can't really do too much. So there's a fair bit of uncertainty out there. And
I'm sure during the election campaign, we're going to hear sweeteners from both sides to add to the general tax policies that have been coming out today and then in the next 2 days. The game begins really next few days.
Yeah. Okay, so we're nearly up to our hour, but has anyone got any questions out there? If you have, you can feel free to either type them into the chat, or you could probably unmute your microphone and ask away. We might not be able to answer it, but we can try. Let's give it a minute in case anyone has anything that they want to ask.
No, very good.
All right. Well, if you do have any questions, you know how to contact us. So please feel free to send us an email or give us a phone call. And hope you found something in there interesting or informative. And we look forward to catching you up on our next webinar, which we don't know what that will be about, but I'm sure there will be one.
Probably have one during the election to see what Labor comes up with.
We might do a post-election webinar.
Yeah, that'll be a good one.
Okay, thanks very much, everyone, and we'll see you later.
Yeah.
Bye.
Do you know the Labor negative gearing?